All right, what's up, guys? Pretty late night tonight in New York City. It's about 10 p.m. Eastern. Standing here on Madison Avenue outside of Trump Tower. I literally just stepped out of the office. There's the office right there, 575 Madison. But you know what? I'm like, we still got to do the stream. We got to make it happen. We got to do it. So here we are. We'll get started in a moment. Thanks so much for joining, everybody. I see New England Crypto, Trade Brigade. What's going on? Good to see you. The Truth here says Maha. Oh, that's right. Yeah, we have the, RFK Jr. news, which is pretty big. It seems like there's just this huge paradigm shift in the country that's happening with Doge, with RFK Jr. I'm pretty optimistic about the future, but, as we've been talking about before, yes, Doge is great. The Department of Government Efficiency. But the bond market's just not really believing it at the moment, right? We talk about, making the government more efficient, cutting costs, hopefully erasing our deficit as we stand here outside of 432 Park Avenue. But the bond market is just not not buying it. The 10-year Treasury yield is almost 4.5%. I think it's 4.443% on the 10-year U.S. Treasury. So, it is, it's interesting stuff. Now, the market is always right. But do we really want to bet against Elon Musk? I don't know. It's interesting. We'll talk about it. DC322, Stephen Bate is here. Welcome, everybody. It's a pretty cold night, too. John Robert, cheers. Professor Dario. DC322. Reggie, 44. This is worried about inflation. That as well. I mean, we got the CPI yesterday. I think it came in at 2.6%. So maybe the bond market's worried about a wave 2 of inflation, perhaps. But wouldn't that also simultaneously, coincide with increased spending? Right? If Trump can really force Congress to cut up the credit cards, so to speak, wouldn't that be kind of contractionary, I guess? We'll talk about it. Junior's here. What's going on? Welcome to Park Avenue. It's a very quiet night in New York. Very, very quiet. Brad's Brain is here. This is Hola Tomas. What's going on? Good to see you. Cheers. We have a little bit of a pullback in the market. Now, if you look at the S&P 500, I guess we'll get into this in a minute. But we'll just do the quick audio and visual check if you guys can hear us. And if we're streaming in 1080p, just go ahead and give a thumbs up in the chat. We'll get started. We're right here on Billionaires Row, East 57th Street, and Park Avenue on a very cold and blustery night. Alan says, J-Pal says there's no reason to keep cutting too soon. Now, we also have, speaking of that, Alan, we also have some SEC news, some Gary Gensler news. Now, he hasn't officially stepped down, but from my understanding, kind of what he wrote, kind of is hinting at that he's not going to be in the job too long. Now, I think his term goes all the way until 2026. We'll see if he serves that out. I think it's quite unlikely, but we'll see. Hey, what's up, Todd? Michael says, Tom, my student is a permanent artist with Goodman Gallery in New York City and is interested in buying an apartment. Awesome, yeah. I'll help in any way I can. I'll help you out. And let me check out some of the art too. I'm pretty interested in that. I always like some good creative stuff, but good to see you, Michael. Paul, cheers, is on my way home. Hope you're well. Tom in chat, 10 red buff. Peter says the bond market is thinking, fool me once, shame on you. Fool me twice, shame on me. The bond market wants to see results and a trend of powering the government. Probably. It's just, and I put in the newsletter that I just sent out to you guys, I dropped the link, and pretty much across the board consensus was that regardless of who was elected president, right, obviously now we know that we have President-elect Trump, but let's just assume, right, for a moment that it went the other way to Kamala Harris. Everyone was expecting more of the same, which is more government spending, larger deficits, and maybe that's kind of why the market, the bond market is acting the way it's acting. Take a look at a chart of the 10-year U.S. Treasury yield, right? Not the bond, just look at a chart of the yield for a second. And going into the election, it was gunning up to new highs, right? Or I should say 52-week highs, intermediate term highs. And after the election, it was up another 4%. So, for people that try to make the argument one way or the other, I think the argument is both, right? The bond market was pricing in more spending, larger deficits for both candidates, right? Since September, I think the 10-year Treasury yield is up almost 22% and up 4% after we knew the result of the election. So who knows? Brad's brain says this market is a little schizophrenic right now. Allie, this is good evening, Tom. What's up, Allie? Well, I guess we'll get started. So good evening, everybody. Welcome back to Walks in Wall Street. Today is a beautiful Thursday. We made it almost to the end of the week. Tomorrow's Friday. Hopefully you all have some beautiful weekend plans. And we're starting to see a little bit of a cooling off in the market. I feel as if after the election, right, you had the initial, what I like to call the Trump pump. Everything was going gangbusters. Pretty much everything was not literally limit up, but you know what I'm talking about. We had S&P running to 6,000, closing at 6,000 for the first time in history. We had the NASDAQ hitting new highs, the Dow hitting new highs, the Bitcoin ripping. And I think a lot of that will kind of settle down a little bit. What's interesting to me is if you look at the gap up on election night, right, or I should say the day after the election on the S&P 500, I'm labeling that as the Trump gap. The Trump gap. And what I think would be an awesome buying opportunity, right, particularly if you watch the volume on the pullbacks in a lot of these stocks. Look at that Cybertruck. Let's see if we can get it as it rounds the corner. That's a classic silver Cybertruck there. If the S&P can gap fill that Trump pump on kind of lame low volume, I think that'll provide us with an interesting opportunity to buy some of these leading stocks. Because I do think that we'll have quite the strong rally into the year end. What I also think is probably appropriate for us to do is go back and do a full post analysis on Inauguration Day, 2016. Trump gets in. How did the market perform within the first month of his term? And I think you're going to kind of see this more of the same, right? Most everybody I talk to, let me just give you one shot of the Louis Vuitton building with the holiday decoration. But most everyone I talk to is very optimistic in terms of the business environment. It seems like deal flow is picking up generally across the board. Optimism seems to be running at highs, at least from the people that I talk to. So what would be good, again, is a sort of a post-analysis, is a study as we go into the weekend, if you have some time, do some research of how specific sectors performed under President Trump in 2016. Which sectors performed the best? How did the tech sector perform? How did the oil and gas perform? How did consumer staples perform? And I'm not going to give you the answer. We wrote about it a little bit in the newsletter, but I do believe that you're going to see more of the same. I am quite intrigued by this. So let's actually cross the street. What do you guys think? Because this is the first night that they are unveiling the windows at the Louis Vuitton store right next to Tiffany, and it looks like there's a lot of people outside. So let's go ahead and cross the street and see what all of the excitement is about. Leslie is here. What's going on, Leslie? Joseph Hardaway, Brad's Brains, as it's been such a short-term run-up, now cooling. I think it's important to sit tight if you like the stock. Don't get scared out. Oh, absolutely. And I would say I would even go a little bit further than what Brad is saying, and I would say the similar thing to Bitcoin and crypto assets, right? Bitcoin has a higher vol, obviously. If anybody has been in the space, volatility is almost unbearable at times. The way that I kind of cope with the volatility in Bitcoin and crypto is just, you have to understand that that's normal, right? That is the volatility of the space. You're going to have like a 3x vol of the S&P 500. So a 30% drawdown in Bitcoin is like a normal correction. The funny thing is, a 30% correction in Bitcoin can happen in 2 weeks, right? So let the moving averages catch up here, and I think that this move is just getting started for multiple reasons, by the way. I wrote a very, very detailed and lengthy piece about some specific regulations as it relates to Bitcoin custody at publicly traded banks that are going to go away. Well, I can't make any guarantees, but I'm betting that those specific regulations at the SEC are going to go away, assuming that Gary Gensler either steps down or is replaced by a Trump-appointed candidate. Hey, what's up, Cameron? Says, love the show, Tom, and conversation. Starting to check in every night. Well, thanks so much for joining us. I appreciate you being here, and thank you for enjoying the show and New York City. Now, it's 10 o'clock, and it feels like, the energy here is insane here in New York City. Let's try to kind of meander our way through here and perhaps take a look at what's going on with some of these windows. I don't know if this is like a private event or whatnot, but we'll check it out. I think it looks pretty cool. What do you guys think? Hey, what's up? Check the logic. Junior says, any clues on who could replace Gary Gensler? I have a few picks on who I would like it to be. What do you think? I have two specific candidates who I think would be perfect for the job, that have a lot of experience and that really understands the Bitcoin and crypto space, generally speaking. 10 red buffs is meh, it seems okay. Macy's was better last year. Well, we were checking out a little bit of Macy's late last night, but they're not, the real windows aren't even really up yet there. But if you check out, just real quick, everybody, if you go ahead and check your email, or if you just scan the QR code on your screen, it's going to take you to the investor letter that I just sent out to everybody. I had to finish it very, very late at the office. That's why kind of we're late on the live stream here. But we really covered a lot, and we covered, some regulatory aspects of the SEC as it relates to rules and regulations of custody at major banks, right? And that's one of the main reasons why the institutional adoption to Bitcoin and other crypto assets has been slower than expected. It really has to do with that regulatory hurdle for custody. So if you want to check that out, again, just scan the QR code on your screen, punch in your email. It'll take you to our Substack. But let's go and start to head down towards 34th Street here. Hey, what's up, Felix? Good to see you. Jack Jackson, welcome. Emma's here. JC says, Tom, are you following any of the UFO? This is UAP topics. Congress hearing? I am not. I'm interested in it, though. I just don't have enough time to kind of cast my net that wide. Professor Dadios' beautiful video in the Plaza Hotel. You know what? Maybe we'll head over there now. I'm not too sure they're going to allow me inside the plaza this late at night with the camera, but you are allowed to film in there during the day. But understandably at night, you're not allowed because, guests are in there and they don't want people filming at night. But the holiday display, the Christmas display is awesome. Really, really beautiful. This year at the plaza. JC says, Tom, JP Morgan CEO Jamie Dimon will not be invited to be a part of Trump's administration. I think he'll be helping in some capacity. Maybe he won't be physically in the admin, but he will be helping probably in some shape or fashion. A lot of people have some choice words to say about Jamie Dimon. I think he's a really sharp guy. But we'll see. TBD, to be determined, I guess. Brad's Brains is fascinating chart in the newsletter, Tom, for crypto total market cap. I've never seen this chart before. Yeah, it usually ebbs and flows with bull market cycles, right? And I started off this week's newsletter kind of doing a little bit of a history and a lesson on market cycles, right? With the news being the bleakest and the most dark right at the bottom of the market. And trying to understand the catalysts that to the common person or the average person who doesn't study markets, they would deem those catalysts to be rather bearish. But there's a difference between getting very, very bad news when the market is at all-time record highs and getting very, very bad news when the market is, in a severe bear market down, 60, 70%. So what really marked the bottom of the crypto and Bitcoin bear market was the collapse of FTX, right? As well as the collapse and the liquidation of Three Arrows Capital, which was one of the largest cryptocurrency hedge funds that lost over $3 billion from 2021 and 2022. And the news was so bleak, right? Everyone thought there's no way the market is ever coming back from this FTX collapse. It was a $32 billion company at its full valuation at the peak of the market. Three Arrows Capital, give or take $3 or $4 billion, which the overall ramifications there were probably about 10 billion plus, if we're just being honest. So to put that into perspective, the entire cryptocurrency market capitalization at the time of the collapse was only about $700 billion, which is nothing, right? Now, $788 billion or whatever it was may seem like a lot, but in the grand scheme of the global economy, global equity capital markets and everything, It's not even a rounding error. It's like the most teeny little thing ever. So a $32 billion hit on top of another $10 billion hit all at once, a massive liquidation event. The media and the news was, and I included some of these articles in the newsletter. The Economist, the headline of The Economist, 3 days before the market bottomed was, is this the end for crypto? Is this the end? You had people coming on the Joe Rogan podcast, literally the day Bitcoin bottomed, saying that Bitcoin has about $16,000 left to go down. It's going to go negative because of the FTX and the 3 Arrows capital collapse. But those are actually massive bullish signs, right? Markets tend to bottom on the darkest fear, on a massive uptick in volume. It's usually called a capitulation event, right? Those two things coupled on top of one another, particularly in the crypto space, to flush out all of the bad actors, to flush out all of the weak hands, so to speak, that is the magic elixir for the start of a new bull market. Now, the last thing I'll say, you could read the newsletter. We spelled this out kind of line item by line item. The beautiful thing about the Bitcoin market is it is an immutable ledger where you can actually see, kind of leaving like a paper trail and a fingerprint on the market, the whales or the smart money. Are they accumulating? Are they holding Bitcoin? For what duration are they holding it? Are they holding it longer than expected? Are they, is their average time of holding Bitcoin shrinking? And what we saw at the bottom was fascinating. Some of the oldest Bitcoin wallets out there kept accumulating at 17,000, 18,000, back to 16,000. They kept accumulating Bitcoin and holding it for longer and longer durations. While you had a divergence in some of the newer crypto wallets that were selling out at the lows, right, which happens in every cycle. Retail sells the lows when smart money accumulates. Then you have that big markup, blast off into all-time highs, and now you're just starting to see retail buy Bitcoin at 80,000. Just now. So it's quite fascinating. Andrew O'Donovan, thank you so much for your generous $10 donation. Hopefully you're doing well. Cheers to you. Welcome to Central Park South. Now it's already mid-November and the leaves are still on the trees. It's been seasonably warm. Yeah, Junior says when Tether unpegged, that wasn't good for crypto either. I think that was around the similar time. Similar time. This is the front of the Plaza Hotel right now. Sabrina Fair is joining us. What's going on, Sabrina? Welcome. Now, talking about capitulation, talking about fear, talking about, what is it called? Oh, this is a nice Tesla here. What is this, Model S? I like that color. It's like a midnight gray. Very nice. Let's do yet another post analysis. And again, I think this would probably be best suited on our second channel, which is still in the works. But if you go back and kind of do a post analysis of when markets bottom, right, showing corroboration with all of those three key indicators, a massive pickup in volume on price declines, very, very bleak and scary news. A similar thing happened when the S&P 500 bottomed. Does anybody know the major cataclysmic catalyst that everyone was freaking out about right when equities bottomed? Anybody know? Oh, right, that's right. MD says Alibaba reports tomorrow. That's going to be interesting. I have a few thoughts on that, but I don't think I'm going to take the bait in Chinese equities. Andrew Donovan says banks crash or FTX. Well, it was the Silicon Valley Bank debacle. Go ahead and do a post-analysis of when the Silicon Valley Bank collapse happened. That marked the bottom for the S&P 500 for the cycle. You know, you had this massive, you know, if we go all the way back to the blow-off top mania of 2021, when you had all of the speculative excess in tech stocks, all of the speculative excess in private equity, in venture capital, in SPACs. When all of that started to come to roost, that's when we had those Silicon Valley Bank problems. That put in the bottom of the market on a major, very fearful event. And you could also see this in equity fund flows, by the way. You had record outflows from ETFs, you had record outflows from standalone equities, and now, just today, one of my buddies at Marlin Capital, which is like a small quantitative shop here in New York, sent me that this week, right? This is such an important key indicator. This week, right, when the S&P 500 rallied, closed above 6,000 for the first time, we had record fund flows from retail investors right at the highs, right as this market is very extended, right as we've, I mean, this has just been the most unprecedented bull run ever. So with retail piling in right at the highs at 6,000, I wouldn't be surprised if we cool off here a little bit, right? Cool off, pull back. I mean, I would welcome if the S&P corrects to the 50-day on normal to moderate to low volume. If it does that, I think you hit that hard and you run that back all the way into the highs into Christmas, or I should say New Year's. Hey, Vladimir, thank you so much for your generous $10 donation. Appreciate you. Hopefully. Now, just because we may get a correction here in the market doesn't mean the bull market is over, right? Corrections are a necessary, normal cooling off period for any market. And I think you'll probably have some volatility and choppiness as we have this, more news coming out from the new Trump administration, right? We had the original initial Trump pump, so to speak. If we just get a normal pullback on moderate to low volume, I think that's going to present a really nice buying opportunity in the year end. If you look at all the statistics, again, talking about post-analysis, right? Go ahead and do a post-analysis of every single presidential election since the beginning of the country and take a guess on which time during the presidential election year was the strongest for equity performance. And newsflash, it's after the election. It's post-election when all of the uncertainty is kind of in the rear view mirror. So there's still a lot of opportunities here. Hey, what's up, Pineapple Water? Good to see you. Yeah, I don't know what happened last night. I think my phone may have died on the way back to the office, but apologize. Brad's Brains' brilliant analysis of Hood, Tom, today in the newsletter, as it coincides exactly with what I see, and which is why I'm long. Yeah, and it kind of, it was a very self-reflected piece today, because if you've been watching this broadcast over the course of the last couple of years, you'll know that I'm not a fan of Robinhood at all. So it's very difficult to set aside your own personal biases with the company and kind of take my own advice, right? I always say don't let your personal opinions and personal politics and whatnot affect your investing decisions. I just can't stand the company. I don't like Robinhood, but they're killing it. Okay, they are. And if you do a review of their most recent earnings quarter, they're taking in a record amount of money from investors. Overwhelmingly, younger investors, millennials, Gen Z, are choosing to put funds at Robinhood. And what I think is the most sticky, what I like to call sticky, is that more retirement funds are getting allocated towards the particular broker-dealer, Robinhood, right? And they're a very future-focused company, right? Do I like the user interface? Do I think they're trying to gamify investing? I do. That doesn't really align with what I believe, but I think that's the future, right? If you look at what's hot, if you look at what the kids want, if you look at generation, Gen Z, Gen Alpha, that's going to be the future of the investment business. And by and large, they want to have a very, very easy, kind of dumbed down user interface, and they want to be able to easily invest in cryptocurrencies, and Robinhood is really the only platform you could do that. Also Coinbase. So, I read, I was studying Charles Schwab a lot in college, right? How the company came about, the role of Charles Schwab in the early days, even when it went public in the late 1980s. And at the time, Charles Schwab was really the disruptor on Wall Street, right? There's a really good book called Invested by Charles Schwab. I really recommend everybody read that book. I think this is a pretty critical point in the new infrastructure of capital markets. And just like what Charles Schwab did to force broker-dealers to drive down commissions on the street, cater towards a retail investor, and really take massive amounts of market share, you're seeing a similar thing happen right now before our eyes with companies of the likes of Robinhood and Coinbase. It's very important we pay attention to that. Whether you like the companies or not, right? Whether they align with your values or not, whether you want to invest in cryptocurrencies, whether you think they're a fraud or a scam, it doesn't matter. If you look at the data, and I think Bank of America just did a survey, and 28% of Gen Z and millennials, so investors age 17 to 45, believe the biggest opportunity to generate alpha over the next decade is going to come from cryptocurrencies, as opposed to investors aged 45 to 75. I believe it was only 2% of that investor base thinks that the most amount of alpha is going to be generated from cryptocurrencies. So, I want to bet on the future. I want to skate to where the puck is going. Even if you're uncomfortable getting exposure to digital assets themselves, you might want to own the infrastructure. So you might want to own the broker dealers that are going to be providing the on-rails or the onboarding rails to this ecosystem. So check out that book. It's called Invested by Charles Schwab. And I think you're going to find the similarities between the vision of Schwab and the vision currently that Vlad has at Robinhood and that Brian has for Coinbase. It's very similar. Extreme similarities, so check it out. Hey, Sharon James, what's going on? This is Evening Tom. They gave us a physical copy of that book on the first day of our internship. Oh, that's right. Sharon, I totally forgot. Yeah, for those of you who don't know, Sharon, I believe this summer had an internship. She worked at Charles Schwab. Great company. Hopefully you get a return offer for a full-time position. And what did you think about the book? Hopefully you read it. It's a phenomenal book. And, I haven't worked at Charles Schwab. You have. So I'm sure you can kind of identify those similarities between the early days at Schwab, since you read the book, the current company culture now, and kind of what the future of the investment business is going to be. That's awesome. Hopefully your internship went really well. Tony says, I don't get all the Robinhood hate. I'm trying to be a little bit more open-minded. I see a real sore spot in my personality with my thoughts to Robinhood. Maybe it's like an ego thing, right? I try to be as open-minded as possible. Everybody gets a little egotistical sometimes, even myself. So as I do like an audit of my own emotions around the company, maybe it's more of like an envy thing, that how could this rinky-dink company that's not really following the original cut cloth of Wall Street, how could they be doing so good? Maybe that's just like a little bit of an ego dig on me, which I'm well open to, but I'm trying not to let it get in the way of my investment thesis, because at the end of the day, I don't care about anything else but making the numbers in my account go up in terms of the investment business, right? Not just in terms of life, but in the investment business. So I don't like the early days of Robinhood, where you would place a trade and they would like blow confetti in your face and all that. I think that encourages poor investing behavior. But as I reflect on that a little bit, over the long term, I think it's going to be good, because you got to do something to get people excited. You got to do something to get the younger generation excited about investing. Historically, if you talk about investing in the markets, it's very boring. It's very dry. People kind of chalk Wall Street up to be like an old white guy in New York industry, very boring, and I get that. So potentially, like, Robinhood will be like the candy that draws people in. When these kids blow up their account because they're trading options, they don't know how they're priced, they'll still have the bug for the investment business, but then they'll learn the proper way to do things. And over the long period of time, you want more young people investing as early as possible. And I think Robinhood has accomplished that. So maybe I will be doing a complete 180 on my perception of the company. So I admit I was probably wrong there, for sure. Kimberly, what's going on? Good to see you. Welcome to the Upper West Side of Manhattan. We're standing outside of the Trump International Hotel and Tower, and it appears they're doing some sort of work on the congestion pricing here. This, what would you call that? The cameras here? I think the governor, Kathy Hochul, may be planning to reinstate the congestion pricing. We spent all the money on the infrastructure, then she pulled the plug on it. I think now that the political election has kind of died down, maybe they're gonna hammer it home. Who knows? 456 is Tom, as I predicted. They are doing congestion pricing after the election. Yeah, I mean, you nailed that. You hit that on its head. You really nailed that one. So, which sucks for anybody who has a car, but it is what it is. Hey, Action Kid, what's going on? It's Tom. It's starting up again on January 5th, 2025, and it'll be $9. All right, well, I mean, at least it's a little bit cheaper, right? I mean, $9 is significantly cheaper than what they first proposed, I'd assume. I thought it was like $15. Andrew Donovan says, I think they're not doing $15, but it's going to be $9. So they cut everybody a little bit of a break. It was a little bait and switch, but at least they cut people a little bit of a break. 1138 says, what does congestion pricing mean? So for those of you who are not familiar with what congestion pricing is, essentially what it is they're trying to discourage the use of motor vehicles in Manhattan. They're trying to force everybody to take the subways. They're trying to make the city a little bit more walkable. So if you want to drive your car south of 59th Street into Midtown Manhattan, you're going to have to pay an extra toll, which I guess is the congestion price, according to the viewers in the chat. Looks like that's going to be about $9. So every time you take your vehicle south of 59th Street, either from Columbus Circle going down Broadway, or I would assume on the other side of Manhattan, on the east side, coming off the 59th Street bridge, going into Midtown East, they're probably going to bang you for another $9. Very controversial. I'm not a big fan of that, but it is what it is. I think that'll be a little bit inflationary. Action Kids says Hochul said she plans to eventually increase the base toll from $9. Deese is $45 a week, or $180 a month to drive into Manhattan. It's really crazy. Lee says congestion pricing is a tax grab. Someone has to supplement the fare evaders on the buses and the subways. That is a very interesting point. Now, not to get too political, but I'm just going to, call a spade a spade. It's complete cartoon land down in the subways, okay? Every time I go down into the subway, I feel like an absolute sucker because I feel like I'm the only one paying the damn thing. It's like, why am I, using my Apple Pay to pay $2.90 when you see all these high school kids, a wave of high school kids, teenagers, and even some, young adults. It's like they're practicing for the Olympics. It's like they're jumping over, the turnstiles when I'm trying to, pay the fare. So, as always, if you're very lackadaisical on crime, the law-abiding citizens, mostly the middle class, are going to have to foot the bill, right? If you let the derelicts of society steal the fare, right, you're going to have an extreme deficit at the MTA. This is 15 Central Park South. And when you have an extreme deficit at the MTA, they either do one of two things. They raise taxes somehow, or they implement these congestion pricing to try to subsidize some of those losses. Because the really, really wealthy people, yes, it's true that they do take the subways, right? Everybody takes the subway in New York, but it really doesn't affect them, right? If you're really rich, you probably have a car service, takes you to your office in Midtown Manhattan, and it takes you back. Not a really big deal. But if you're just a working middle-class person, you're going to get banged for the $2.90 taking the subway, and God forbid if you want to, take your car into the city, they're going to bang you again for the $9. And taking it a step further, the criminals won't pay the congestion pricing because they'll have fraudulent license plates that the NYPD won't crack down on. So essentially, it's just a double whammy, absolute unmitigated wreckage and carnage of the working poor in the city, as usual. Hey, Lori, what's going on? Good to see you. Thanks for joining. Lee says MTA has lost more than $700 million to fare evasion on the subway alone. That's a lot. That's a lot of money. So here's another look at the congestion pricing. Cameras. Reggie44 says everyone pays the subway in Korea. You know what was the most fascinating thing about being in Korea? Not only is the subway system very efficient and very safe, at many of the stations, they don't even have turnstiles. So what I mean is, and I guess I'll give an example. We're at the subway. We might as well go down there. So if you think about a traditional MTA turnstile, which we're about to see right now, in many stations in Korea, what they'll have is they'll have the scanners without the physical turnstile, and they just trust that people will tap their credit card or use Samsung Pay to pay the fare, and they don't even need to put up any barricades or blocks to prevent anybody from stealing everything because they just assume that people are good, productive members of society. It's kind of a very eerie thing to see, coming from New York. So here's what I mean. So now we're down into the underworld, right? And these are the turnstiles. So you tap the Apple Pay, and then you go through the turnstile. In Korea, it's this setup, but there's none of this. Like, there's no physical thing to go through. I mean, if it was set up like that in New York City, I mean, if Lee was saying that there's $700 million worth of, subway fraud, I mean, that would be, 700 million times 2 worth of subway fraud. So, but anyway, that's kind of what it looks like. This is the one train. All right, let's make our way back up. Now, when you walk up Columbus Circle, this is an awesome view of Billionaires Row. check the logic. Says, don't the police beat the criminals in Korea? No. Here's the weird thing. Police officers in Korea, they don't even carry weapons. I mean, think about that for a second. So like a police officer here in New York, some of them, like if you're in the emergency service unit, a lot of those guys and girls are running, long guns, like ARs, probably like an AR style weapon. In Korea, the police officers don't even carry firearms. Seriously. Which honestly, walking around Korea, particularly Seoul, Osan, Busan, Suwon I went to, it was a very nice feeling. It was a very, very nice feeling, honestly. Hey, Haas Manning, what's up? Hopefully you're doing good. Happy holidays. Trust you're having a good November. Here's one more look at 15 Central Park West. We'll take one more lap by the gates and then we'll head down. Photos from around New York. Good to see you. Let's see if we run into the Cybertruck, the matte red. Pappas is $7 trillion, still on the sidelines. Why is that? My answer is I don't know, but I could guess. Interest rates are still pretty high, right? If you go back to the very beginning of the live stream, the biggest question that I have, just look at how beautiful 15 Central Park West is, though. I mean, behind these gates, like this corridor is just a beautiful building. All limestone, it's amazing. Even though we had about 75 basis points worth of interest rate cuts, the bond market is either calling bluff that the Trump administration is going to be, the administration to reduce the deficit, reduce the national debt, rein in government spending. The bond market's sniffing out something. I just don't know what it is. I mean, you would think, if you have a candidate that created DOGE, the Department of Government Efficiency, that is essentially, its whole purpose is to reorganize our government and make sure tax dollars aren't wasted. You would think the bond market would kind of be pricing that in. It's actually pricing in the opposite. So interest rates, like if you look at the 10-year U.S. Treasury yield right now, I think it's 4.33% or 4.4%, right, on a 10-year U.S. Treasury. So think about what that means for money markets. So a money market is probably going to yield an investor 5%. If you are an elderly person, maybe you're retired, you don't want to stomach the volatility of the market. You've lived through COVID, the pandemic, when the market went down 30% in a matter of 2 weeks. You lived through 2018, you lived through the crazy, blow off top 2021, and you're like, look, I'm going to collect my 5% risk-free rate of return on my 15 million or 20 million bucks and just call it a day. And I get that. What's a 5% rate of return on 20 million? It's impossible to touch the principal. You can just live off that interest. So my theory is that until interest rates start to come down, you're gonna continue to see balances in money market funds either remain steady or just continue to grow. That's my theory. But I am totally perplexed as to why the bond market is getting decimated here. We just got the CPI. I think we got PPI out today. I didn't even have enough time to look at what PPI came to. I actually have no idea. Maybe you guys could tell me. But we got CPI, which was 2.6%. That's all the way down from a peak of 9.1%. Is the bond market telling us that inflation is going to ramp up again? I mean, I don't know. I don't know. Stephanie Stern says, how long do you think it will take for rates to go down? My honest answer is I have no idea. If I did, I'd probably be a billionaire. That's why I would always advise against, like, you know, getting an adjustable rate mortgage or like an ARM or something like that, because you really never know, right? You could be Bill Gross himself, and you really never know what interest rates are going to do, right? Everyone, you know, all these economists that are very high paid at all these big banks, they try to predict the economy, they try to predict what everything's going to do. Oftentimes, they don't even come close. So, you know, sometimes the people that say, you know, get an adjustable rate mortgage and refinance later. Well, how do we know that interest rates are going to be lower later? You just never know. You just never know. So there has to be some sort of inherent risk there. Now, obviously, with the newer ARM products, not to just totally derail the conversation to housing, but with the newer ARM products, it's not, I mean, there's a cap on the rate. I think it's like max 1% when it comes time for that rate to adjust. But that still could be, you know, quite significant. So my honest answer is I don't know. I don't know. Maybe the bond market, I think Trade Brigade said it in the chat earlier, or it may have been someone else, maybe Brad. Maybe the bond market is looking for some sort of actual confirmation and evidence that government spending is going to be reined in. Which makes sense. I mean, it's been so ingrained into our society here in the United States that the government, well, Congress, I should say, because Congress essentially is the deciding factor of if we spend more money or not. They always spend more money. They always vote for more spending. Hey, Aldo, thank you so much. Says, hey, Tom, been a sub for a while. It's 3:45 a.m. in Scotland, and I work at 6 o'clock in the morning. Love these walks. Wow, what a legend. Up early, too. Hopefully you have a good day at work, and thank you for these walks, or thank you for watching the walks. All right, I just saw comments about PPI. Meme Machine says PPI came in slightly high. The big thing is the shelter costs in the CPI report continues to, you know, make up the vast majority of the inflationary move. Now, speaking of inflation, we briefly talked about this last night, but it was one of you guys, I don't know if it was Brad, somebody sent me a DM on Twitter today, or X, and it was this founder. Obviously, he works for himself, right? I think he had 3 kids, a wife, everyone is healthy, and his insurance premium a year is like $50,000 or like $55,000. This post went viral on the X platform today. And, I mean, think about that for a second. You know, if you are a self-employed person and you just need to buy health insurance, and I believe he said this doesn't even include dental or vision coverage. For a family of 5, right, everyone's healthy, nobody has like a major pre-existing condition, it's $50,000. That's, I mean, I'm not an expert in healthcare, I'm not an expert in any of this, but something seems to be pretty broken. Because that is just, let's say if you go the entire year and nobody gets sick, $50,000. Andrew Donovan says per year. Yeah, I mean, according to the post, it was per year. Let me see if I can put the post in the chat. Give me a second. I think I may have retweeted the post. MD says, yes, my insurance is $10,000 and my company pays like $9,000 of it, thankfully. Peter says, that seems like it's too high. Maybe it is. Again, go to my X page, and I think I retweeted it today. Or reposted, whatever. Leslie says RFK will hopefully get that under control. Look, I mean, I don't know what the solution would be to that. It is crazy. That's what, and I think the overarching theme of the post is the founder said something along the lines of, how many Americans do you think have really big dreams, really big aspirations to go start a company, but they won't leave their 9-to-5 job because they have really good health care. They have really good health insurance. I mean, I don't know about you guys. I'll speak for myself, but some of my really, really good friends who are now retired from corporate America, they had incredibly successful careers in tech sales and in telecom sales. And they say, Tom, I still keep, a little job where I work, maybe 30 hours a week, 25 hours a week, just so I could have the health care, just so I could have really good health insurance. I have like 3 really good friends that retire from corporate America, but choose to keep, just an easy, layup job, just so they can get company-sponsored health insurance. Anyway, if you guys are enjoying the live stream, feel free to leave a like on the video. Click the subscribe button if you're new. Just as a quick reminder, everybody, we did just send out our free investing newsletter. We covered a ton. We did a deep dive into some of the SEC rules and regulations that I believe are going to be undone during this new administration, assuming Gary Gensler steps down. This is like critical stuff. So if you want to receive all of our free investing research every other Thursday, I just sent it out. You can just scan the QR code on your screen, punch in your email, or just type in !news, NEWS, in the chat. We're looking at 432 Park Avenue in the distance, and we're standing right outside of Central Park Tower, which is 217 West 57th Street, the Nordstrom building, right here on 57th. Hey, what's up, Nina? Vajra says, you used to live in Queens, love Queens, New York, particularly Flushing. Sabrina Fair says, healthcare is getting worse in the United States. Even with insurance, it takes months to get in. Hawaii says they need to make healthcare better for senior citizens and vets. Oh, I totally agree. I don't know anybody personally that deals with the VA, but just from what I hear generally on the news and reading articles, it's not the most pleasant experience for people to deal with the VA. Is there anybody in the chat or in the audience watching? Maybe you have experiences with the VA personally or have a family member who does. Has it gotten better or worse over the last, let's say, 8 years, right? Because that'll give us 2 administrations under our belt. Rocky Rocks, Tom, if his business is making over, was it $300K net? Yes, he has to pay the full insurance amount, but if his business is making only $50K a year, then his family of 5 has to pay only $50. I think he's a very successful founder. I think he has like a multi-million-dollar business. Nina says, years past, I worked shortly for the VA. Crisis, how veterans are left to dry with benefits. Wait over 1.5 years to get. Jeez. Joel PM says, Trader Joe's offers full medical care. at 28 hours a week. 31 says, Tom, malpractice insurance costs doctors a lot of money. Leslie says, my insurance company keeps dropping my doctors and I have to find new ones. Sean says, Tom, the VA is terrible. So from my understanding, the VA will try to, and again, I just want to make this very clear. This isn't from my personal experience, this is just what I'm reading. I don't want it to sound like I'm dumping on the VA. But from what I'm reading, it seems as if when a veteran goes in to get some sort of care, right, let's say, hey, I got deployed, I have PTSD, I'm dealing with mental health issues, the VA will often try to say, well, we can't prove that it was from a deployment, so we don't cover it. Again, that's just some of the stories that I've read online. To which I'd say, it's pretty much just like any insurance company, right? If you file a claim, they'll fight you tooth and nail to try not to pay it out, essentially. We're now standing outside of Carnegie Hall. Junior says, Tom, I have veteran benefits and have never exercised that care. It's horrible and they hire inadequate clinicians. Brad's brain says, what's incredibly infuriating is that these costs went up exponentially since the Obamacare debacle. Twisted Things says, yeah, for any insurance company, it's difficult to get them to pay. Junior says, I'm fortunate enough to work in healthcare and have great benefits through my employer. Hey, what's up, Combat Jones? Good to see you. Rebecca, what's going on? It's definitely a big problem that needs to be solved. This is 157. This is the first building ever constructed on New York City's Billionaires Row. So you have the Park Hyatt Hotel New York right here, which is the best hotel in New York City in my opinion. And then the other door, you have the entrance to the residences at 157. You have Michael Dell, Bill Ackman that have really, really nice units in here. Steve Areno says I got, early out in 89 when the Berlin Walls came down, 3 years and never bothered to check. Tony says working in healthcare doesn't guarantee quality care. I guess it really just depends on what company you work for. 31 says I worked in healthcare IT for 20 plus years. There is a lot of waste in the medical industry, especially in hospitals. Interesting. Could you name like an example of that, just out of curiosity? Now, I used to sell a lot of software into hospitals, home health care agencies, and nursing homes. But I wasn't really close enough to see like the day-to-day operations and if there was like waste or malpractice. The software and the stuff that I would sell actually would help increase, operational efficiencies. And I'm sure if you work at a hospital, you've probably heard of the software Epic. So like New York Presbyterian, pretty much all the major hospitals run on the Epic software. And we would integrate that across a lot of their devices. So each particular unit at the hospital would have iPhones with the Epic software on it. The phones would be color-coded by which department it was, things like that. And then we would sell like the cybersecurity software to lock everything down. So no external websites or applications could be opened on those devices, things like that. Like a traditional like EMM or an MDM. This is Angelo's Pizza. This is a famous spot, but I've actually never been here before. Hey, what's up? Hang with Mark Mom says, yes, Epic is what my husband uses at work with patients. Love that. Nina says, totally agree with the chat messages. I've pro bono VA short period. Found self very angry with government policies. Seeing it hurt our vets. Twisted Things says, Epic runs great. I liked working with it in healthcare. I also worked very closely with a company, which is New York based. It's called HHA Exchange, if you want to look up that company. So essentially, and this kind of goes back to our conversation about getting lucky. I just kind of fell backwards into an industry where the government mandated electronic visit verification for home health aides right at the time when I was selling it. So the solution essentially that we would sell is the turnover, right, or the employee churn, more specifically the employee retention at a home health care agency is very, very low. They don't retain like any of their employees. They can have like 500% turnover in a year, quite literally. So what we would provide is an employee benefit where a home health aide would get a free smartphone, like a brand new iPhone. But the company would pay for the phone plan, and it would come pre-programmed with HHA Exchange, which is essentially a way for the home health aides to clock in and out remotely and make sure that anything that they're doing to the patient, like if they're administering medication, if they, did like a Hoyer lift, if they like bathed the patient or took them out like for a walk, they could check that off electronically to make sure that essentially you don't have to carry around like pounds and pounds and pounds of paper. So digitize everything. And then we would download all of their payroll through a company like Viventium or Medfleet or something like that. And then we would containerize the phone. So we would sell like an MDM. So one side of the phone would be totally encrypted to work use only. The other side of the phone would be completely personal use. And then that pretty much cut out all of the administrative costs. Because what we found is at a home health care agency in New York, on Friday afternoons, you would have a line literally of hundreds of home health care aides turning in their pay stubs, turning in their time cards to the admin office to make sure they get paid for the next week in physical paper, right? Writing down, hey, I worked 6 hours on Monday, 8 hours on Tuesday. And since it was physical pieces of paper, a lot of the times the home health aides would get cut on their hours. So if they worked 40 hours a week, the admins, maybe if they couldn't understand the writing or maybe if it was a messy handwriting, they would only get paid for 20 hours. The home health aides would get very upset. And that would force more churn, right? It would cause them to feel slighted by the company to say, hey, I worked 40 hours, you only paid me for 30, I'm going to quit, right? And those products that we sold actually did really, really good to increase employee retention, increase employee morale, so that the aides wouldn't have to fumble around with paperwork, so they could focus on what they need to do, which is taking care of the patient. So which in turn really, really did a good service for patient care. So, but that's really, I didn't, get into the weeds of, how they're running their operation behind the scenes. I just saw it from, kind of the payroll standpoint, the efficiency standpoint, things like that. This is the Alliance Bernstein building. We'll take a look at the giant globe that they have here. Hey, what's up, Philip? Philip Robinson says, Tom, you're right. So much turnover at my mom's nursing home. You never know who is there. From one day to the next. And a lot really don't want to be there anyway. Yeah, it's difficult because, a lot of these patients, if they get a specific home health aide that they really like, and then they build a nice relationship over, let's say, the course of 2 or 3 months, but the home health aide feels like they're not being treated appropriately at the company, they quit their job, and that not only results in a poor experience for the company, it results in a poor patient experience, which is not what we want at all. So I definitely agree. This is the main flagship Hilton Hotel. Now, Cantor Fitzgerald, the CEO Howard Lutnick, is on the Trump transition team, and he is also very, very pro-Bitcoin and crypto. Now, the reason why I bring that up is because in the newsletter that we just sent out today, so go ahead and check your email box, we talk about the future of finance in terms of being able to collateralize specific assets, similarly what you can do right now with, collateralizing your stock portfolio, right? Depending on which banking institution you have, if you want to get a loan, let's say if you wanted to pay cash for a property, right? But you have $5 million in Apple stock. Well, you don't really want to sell your Apple stock, right? Because that would be a taxable event, and you don't want to sell your stock because you think the company is going to appreciate over time and do better. And you want to collect the dividends, you want to take part in the capital appreciation of the company. So what you could do is go to your bank and say, hey, give me a loan backed by my Apple stock because I want to buy this house. They'll probably set some sort of an interest rate for you, right? SOFR plus whatever. And you could use your assets as collateral. I believe that that's coming to the Bitcoin ecosystem, but there's a missing piece of the puzzle that's really preventing, how should I say this? Preventing banks from doing that. Because as it stands right now, if a bank wants to hold, or custody, I'll use that term custody, if a bank wants to take custody of Bitcoin or any other digital asset, they have to keep it on their balance sheet, which is ridiculous because every other asset that a bank would custody, they don't have to put it on their books, right? So they have to offset it with a liability. Once Gary Gensler is out of the SEC and we have a new chairman or chairwoman or chairperson, I think you're going to see that regulation go away. And when that regulation goes away, regardless of if the CEO of JP Morgan Chase, which is Jamie Dimon, if he likes Bitcoin or crypto or not, he's going to want to get into that business because Goldman Sachs is going to get into that business, Citibank, all the major banks and the broker-dealers, Cantor Fitzgerald and the like. And that's going to really open the floodgates for institutional adoption for this asset. So just keep an eye on that. And we wrote about that today. So check it out. If you want to read the piece, I just emailed it to everybody's email box 30 minutes ago, or an hour ago. So go ahead and scan the QR code on your screen, punch in your email, and you'll receive it. But I think that's what we need to be watching very, very closely. And that could also be very bullish for bank financials too. If you talk about earnings power, it's just another segment of the business they could expand into. Think about total addressable market. This is like a whole other can of worms that could be a multi-trillion dollar industry. So even if you don't like cryptocurrency, even if you don't like Bitcoin, but you own bank stocks, this could be a very bullish catalyst over time to generate more earnings power for those banks. So very, very important we pay attention to this. Again, you could read it in the report we just sent out by scanning the QR code on your screen, punching in your email. This is 6th and a half Avenue here. This is West 53rd Street. This cool looking building up there is 53 West 53rd. It's one of the Billionaires Row type buildings. Raymond's is that Kenneth Fitzgerald guy, just rubs me the wrong way, but that's just me. He has a very New York person to a dead zone over there. Unfortunately, there's no internet on 7th Avenue. But yeah, if you could check it out, Howard Lutnick and Pomp. That was a really good podcast to kind of get a perspective on his personality. Jay, this is Tom. Do you see a scenario where banks can custody your BTC and you can get interest off of it? Yeah, 100%. That I included that in the newsletter I just sent out. You know, similar to holding a treasury, right? You buy a U.S. treasury, you get yield. I think you're going to be able to do the same thing. You know, you give the banks your Bitcoin, and you can get a risk-free rate of return off of that. Now, I'll try to walk down Avenue of the Americas, but I don't know if we'll be able to with all the buffering. Oh, speaking of Charles Schwab, here it is right here. This is Schwab. Head down towards Radio City, but it's probably very late at night because we did start the live stream quite late. So what is it, probably 11:30 at night already? Ah, 11:15. Copy that. MD, so speaking of Schwab, don't you think the takeover of TD Bank was kind of swept under the rug? Are you talking about the Ameritrade? I don't know. I wouldn't say swept under the rug. I mean, maybe just out of the news cycle. But apparently there were a lot of disgruntled customers that left because the transition, I guess, was really horrible. I don't know. I was always with Schwab. I wasn't on the other side, but something went wrong with the transition. There's always going to be things that go wrong with the transition. And a lot of those customers left to Robinhood because one of the crazy things that Robinhood is doing, I think, is matching deposits up to 5%, which is wild. So they're giving you 5% of your deposit or something like that. They turned off the Christmas tree. $31 says I went over to Schwab and I like it very much. Yeah, I mainly use Schwab. I use Interactive Brokers as well. But you know what I think I'm going to do as well? I'm going to open up a Robinhood account just to know about it. I want to know about it. I want to understand the platform. Because if it comes time for me to buy the stock, which may actually be a very real possibility, I don't own it yet. I want to be up to date on that. Yeah, Ben says Robinhood Gold will match up to 11%, which is crazy. I don't know how that's sustainable, but apparently that is. Oh, Junior, thank you so much. Glad you enjoyed that. Yeah, the Gossip Girl penthouse listing, that's all the way down in Lower Manhattan. We have a few really impressive listings coming up here very soon. The Short Guy says, Tom, thank you for the walk tonight. You're the man. Cheers to you. Thanks for joining. Appreciate it. Let's go ahead and check out the Rockefeller Center. Christmas tree. Pineapple Water says, oh no, don't do that. It will frustrate you. It's extremely basic. I'm gonna do it anyway because I see real opportunity for the company. I see a lot of opportunity for Robinhood and Coinbase. I think my thesis is that it's going to be the Charles Schwab of the next decade. So if you study when Charles Schwab went public, 1989, its stage 1 IPO base for Schwab is very similar to the Robinhood stage 1 IPO base and the Coinbase stage 1 IPO base. Ben's, Tom, have you worked with any hedge funds? Yes, I work with one right now. Ben says get the Robinhood Gold. I'll look into it. Triple G's, Tom, you want to open a Robinhood account for the speed of a trade or for the ease of the trade? Seems like you already have that at Schwab. Neither. I'm just going to open up an account just so I can immerse myself in the user experience, understand the products that they have to offer, because I may buy the stock. If Robinhood breaks out of this IPO base and really runs, assuming that earnings continue to come in good, I may start a sizable position in the company. And I think the phase 2 of my analysis, right? I've done the work on the financial side, but I haven't really done the work on the physical side. I mean, everybody I talk to that's below the age of 35 uses Robinhood. It seems like all the young kids use Robinhood. So potentially this is the Schwab of the next decade. They seem to be very focused on what I like to call the new economy, the new investing economy, which is crypto. So I don't know if I'd put any of my money there, but just to kind of think about it. Let's check out the ice skating rink. Yeah, Triple G, check out the newsletter I just sent. I did a very short bull thesis on Robinhood, Coinbase, and some similarities with Charles Schwab, particularly the same trajectory of their IPO in 1987. Hey, what's up, Colton? Good to see you. I ran into Colton 2 days ago getting coffee, or was that yesterday? We'll have to meet up again, maybe next week. But then, I'm going to be in Miami probably the entire week. I should say the entire first week of December. So if you're going to be in Miami, let's connect. I should be there for a solid 2 weeks. Assuming everything goes well, which I think it will. But I just don't want to spend the holidays in Miami. The holidays I spend in New York. I don't go back to Florida during Thanksgiving, Christmas, or New Year's. I think the place to be during the holidays, in my view, you can't be in Miami for Christmas. You can't be in Miami for Thanksgiving. You got to be in New York City. Maybe I'm a little bit biased, but that's just my personal opinion. I kind of want to be home for the holidays. Pretty soon we're going to be filming the tree lighting at Rockefeller Center. Hey, what's up, Connie Ruiz? Fun Feeds, what's going on? Oh, that's right. There was a big fire at the Hudson Yards this morning. It's terrible. I don't think anybody was injured. I believe there was a mechanical fire. Kristen is here. Hey, Tom and chat. What's going on? Hawaii says, love being on the island, but there's no place like New York City for the holidays. It's just kind of hard to be festive, I guess, in Miami. I mean, I love Miami. This isn't a knock against Miami, but when I think of Thanksgiving and Christmas, I think of, colder weather. It's kind of hard to get into the holiday mood when it's, 80 degrees out. Look at some of these older buildings up and down Fifth. This is Saks Fifth Avenue. Obviously, they won't have their display. unfortunately. Still looks good though. This is 11:26 p.m. in New York. Yeah, we started late. Started late tonight. It's just, like I said, it's been crazy busy in New York. I feel as if after the election, people want to do business all of a sudden in New York City. Which is good for me. This is 600 Fifth Avenue. Quite nice. Johnny's is a cold, not super cold, but it's a little chilly, honestly. Matt G says, Tom, do you have a degree? If so, from where? Well, I went to college. I went to a local public school here in New York City, CUNY John Jay, and I studied criminal justice and economics. This is another interesting view at the Rockefeller Center tree. I think they have the star on top. Look at this. But no, I didn't go anywhere special. I'm not smart enough to get in any of those top tier schools. Wow, look at the star on the top. Looks pretty good, right? Hey, what's up, Mars Tech? Good to see you. It's like super quiet in New York City. Last weekend was crazy. Last weekend it was like the busiest I've ever seen it. Although, to be fair, today, Midtown Manhattan was rocking. Absolutely rocking with business people, people working in the offices. This is Jamie Dimon's new office tower. We'll bang this right by the News Corporation building, and then we'll head back up. Look at this grand opening, 48 Finest. Looks like a little bodega. Diane says, always love your midday posts on X. I think I'm a little bit too addicted to the X platform, but it's such a good platform. I think X is by far the best social media platform for news and for the financial community. I mean, you could have real interactions with some pretty, top tier fund managers on the street through X. It's a great platform. Here's Fox News. Usually they have their Christmas tree. I think one year someone set it on fire. Remember that? Was that 2021? Someone set the Fox News Christmas tree on fire. Esmeralda says, I'm kind of addicted to X as well. I would say I am absolutely addicted. I always let's say if I go long something, I always scour X for the conflicting thesis to mine. Hey, Tariq Khan, what's going on, man? It's good to see you as always. Raymond says, Tom, your cinematography is A1. Your framing. I really like making videos. I enjoy it. I also like photography. I appreciate it. I think if money wasn't an issue, right? Like if I didn't have to make any money, I would probably just walk around New York City and Miami all day, just taking interesting photos of things that I see are, that'd be a good shot. That'd be a good photo, or that'd be a nice video. It's like one of my hobbies, I guess. I guess I can live vicariously through the live stream and do that. What is this? The Saints. Fox Nation. Let's get a little bit closer and check this out. Interesting. Does anybody watch that show, The Five, on Fox? Anybody ever seen that? The show, The Five? They film it right here. Jessica Tarlov is one of the anchors on The Five. She's a she's a total sweetheart in person. Such a nice lady. Her husband's a really good guy as well. I showed that they came by to one of my listings one time. I could talk about it now because I sold the apartment to somebody else, so it doesn't matter. But I was like, damn, I'm like, this lady looks so familiar. And I was showing them the building. I was talking to them about the apartment, giving them a little bit of an update on the market. And I'm like, wow, for some reason, she looks so familiar. But obviously, when you're showing somebody, you have to be like super professional. I don't even bring it up. But I Googled her first and last name right after the showing. And I was like, Jessica Tarlov from The Five. Anyway. I'm just reading this headline. What does this say? Rate cuts. Fed Chairman Jerome Powell says the Federal Reserve will likely cut its key interest rates slowly and deliberately in the coming months. Yeah, didn't Powell speak today, I believe? I was watching a little bit of this speech on Trade Brigade's live stream. I had it up at the office while I was writing up some contracts. Richard says she's quite the liberal. Yeah, I don't really care about their politics. But she's a really nice person. This is Del Frisco's. Love this spot. You can kind of see a little bit of the main newsroom at Fox News here too. Oh, this is look, $9. Under the plan, most drivers entering a zone below 60th Street during peak hours will have to pay the toll. That's the congestion pricing. So this right here on the bottom floor and the top floor is Del Frisco's. If you guys are visiting New York City this year, go ahead, spend the money, eat at Del Frisco's, but sit on the top deck and look over at Radio City Music Hall. It's awesome. It's an awesome experience. MD says yes, he signaled that the economy is strong and interest rates may not happen as big or as quickly as he thought. Yeah, well, we're pretty much at full employment. We had GDP numbers get revised higher twice, and we're starting to cut interest rates and ease. It just seems a little bit, I don't know, a little bit interesting to me. Look at that dining room at Del Frisco's. This is my favorite place. This whole plaza is amazing. Let's try to jaywalk a little bit here. I'm so surprised they didn't put up the Christmas decorations here yet. Right here at this fountain is where they usually put up those big Christmas bulbs. Yeah, Ben, there's a few good steakhouses in Sunny Isles Beach. Those Argentine steakhouses from Argentina. Argentine steakhouse. Ben says I have a condo at Aquilina. There's nice restaurants there also. Ben, I have a hilarious story to tell you about Aquilina. I'll email it to you, but it's a funny story. Every time I talk to somebody about Aquilina, it's always a hit or miss on the building. They either love Aquilina or they hate Aquilina. JD says, Tom, what's your go-to steak? What's my go-to steak or my go-to steak house? I guess I'll give you both. I'm a big New York strip steak guy. I love a good New York strip. My favorite of all time is when I'm back at my place in Miami. I get on the Vespa, go to Whole Foods, shout out Amazon. I get a grass-fed New York strip, and I grill it on this $10 janky charcoal barbecue grill from Walmart. and it tastes amazing. Now, the favorite steakhouse was right there, which is Del Frisco's. Do they serve the best food? No. But the environment, the ambiance there, it's just a great time. So you're kind of paying for an experience, so to speak. Professor Dario says, I remember the Essex is one of your favorites. Ah, yes. So that's a little bit newer. So for those of you who don't know, the JW Marriott Essex House recently underwent a renovation, and it's unbelievable, the renovation. The place is absolutely gorgeous. There's a new steakhouse in there. It's called Bourbon Steak. Very good. It's not a little pricey, it's very pricey. But I would still recommend going at least once. It's in the lobby of the Essex House. It's called Bourbon Steak. It's very good. Mars Tex, when will we go to Wall Street Parts in New York? It's been a while. I miss the older buildings. It's been a while since we've left Midtown Manhattan. It's just been very tough for me to get down there because I've been spending so much time in the office, and I'm in the office until like the time we stream. So I usually just head downstairs and boot up. I thought I was going to be in Lower Manhattan tonight, but I wasn't. I had to be at the office to do something. So I'm going to try my best to get down there. I'm really, really going to try my best. Now, Ben, I think you should check out this place, 53 West 53rd Street. To be honest, I'm not really a big fan of this building, but I have a lot of friends who absolutely love it. The problem with this building, you want me to tell you the problem with this building? I'm going to tell you the problem with this building. The problem with this building is the angular designs on the facade block the views. And the kind of angular sloping facade can make the units feel a little bit cramped. And I'll give you an example, right? If you're looking at a floor plan on one of the units, and let's say the unit is 2,000, let's say if it's a bigger unit, it's like 2,000 square feet, right? Probably, I'm not going to say the majority, because that would be a little bit exaggerative, but there's a good portion of the square footage that is probably not usable because the ceilings slope like this. So it's not like you could stand up. It's very kind of awkward to put furniture there because the building like slopes up in a triangle point. But you can get some good deals there right now because, you know, the from what I hear through the grapevine, the sponsor is willing to let a lot of the units go at a discount. So they'll probably pay like mansion tax, they'll probably pay transfer taxes and the sponsor's attorney fee. And they could probably, you could probably hit that like under, maybe 8 to 10 points or 10% off the list. That's my only, kind of thing about that building, where you don't get that at Central Park Tower, you don't get that at 157, and you don't get that at Steinway. Too much like angular designs, and you can kind of see it, right? Oops. Hold on. I gotta fix my gimbal. Okay, you can kind of see it. So if you look right here, like that's someone's window, but your view would be blocked by this diagonal beam. Like in a traditional building, it's not blocked, but you have so many lines, zigging and zagging and blocking all the views. Then this is the Washington Hotel by Wall Street is for sale. The Washington Hotel. Send me the listing. I'll take a look. I'm not familiar with it. A lot of those older offices down in Lower Manhattan are getting converted into condos. It's good to get more product on the market, but I don't know. I don't think I would ever buy a unit in one of the conversion projects, in my view. But that's just me. I think 520 Park is really, really growing on me these days. I mean, it's just too expensive, like stupid expensive, but it's very, very, very nice. I believe the CEO of, I don't want to get this wrong. I think the CEO of Houlihan Lokey has a really nice unit there. It's one of the boutique investment banks. Oh no, it's not them. It's Moelis, I believe. This is 432 Park. This is going to bring us by the Peninsula Hotel and the St. Regis. Wow, looks like the peninsula is packed. (700 Fifth Avenue). What an address. Beautiful address. I think the best address is probably 1 Central Park South and 1 Central Park West, which Trump used to own both of those addresses. Raymond says, Tom, do I think Gensler will resign? I would say yes after what he put out today. I believe Gary Gensler put out a statement earlier today just talking about all of his accomplishments at the SEC. So we'll see. I mean, what do you think? You think he will resign? Now, I think this property here is beautiful. I really like the limestone kind of facade on 15 Central Park West. I really, really like that. 220 Central Park South I love. You know, it's good that New York kind of keeps some of its original architectural integrity, right? Like this at the St. Regis. Also at the Mandarin Oriental in the distance right there. This is a good shot of the peninsula with the moon in the background. This is a cool view looking all the way up Fifth Avenue. What do you guys think is better? St. Regis or the peninsula? What do you think? They've been doing construction on this corner for a long time. Like 3 weeks now. Now, this building right here, oh, many of you were saying the peninsula. Professor Dario says peninsula. Hawaii says peninsula. Now, maybe you guys can do a little bit of research on this building. You see this building with all the beautiful stained glass right here? If you look closely, you can see very, very faintly really, really nice custom design on that glass. You guys see that? Now, the reason why I bring that up is back in the day, and this is when I used to come into the city when I was a little kid, like 8, 9 years old. This used to be some big, like, hair designer. I think I'm going to butcher the name, but maybe some of you know. I think it's called Frederick Fekkai or something like that. The whole store used to be his hair salon, right? And there was a big plaque right as you would enter the store, and it was a little bit of a story about these original windows. And I think the windows alone are worth like multiple millions of dollars. I just forget what the address is. I wish I had the address so I could just tell you guys what it is. So maybe we could look up the story on those windows. But these are like very, very rare custom windows. You got to remind me to get the address, and I'll send it to you. But it's a shame because that building has been vacant. I mean, man, that building must be vacant for more than 5 years. All three of them, right next to the Harry Winston. All of them are so beautiful, but totally vacant. This is a cool shot of 53 West 53rd Street. But yeah, look at how beautiful these three buildings are here. And all of them are vacant, unfortunately. They look pretty well kept. Hopefully it stays that way. Looks like Trump is home, or somebody. Look at all these black cars here, right by Trump Tower. All of the vehicles are DHS license plates. This is the main entrance to the condo at Trump Tower. I think I've told this story like a million times, but I had a meeting at the business center at Trump Tower. This was a little while ago. And it's beautiful up there, by the way. The business center in Trump Tower, absolutely beautiful. Gorgeous. They just redid it after the pandemic. It's stunning. But the funniest thing is they have these really, really nice Samsung TVs, like these huge big screen TVs all around the business center. There must be like 8 of them. And do you know what Do you know what channel was on every single news network or was on every single TV at Trump Tower? And I'm talking every TV in synchronization. Yeah, line sync, you're right. CNN was on every single TV at the Trump Tower on in synchronization. Which leads me to believe it's like, is the beef that Trump has with CNN like all the facade? I mean, you would think and Trump lives there, right? I mean, he has his primary residence. Well, one of his residences in the top. Anyway, just a little bit of a funny story there from my time at Trump Tower. Guys, thank you for joining me. I have to go back to the office. I wish you all the best. Have a wonderful Friday tomorrow. God bless. Be safe. Just as a quick reminder, check your email box. I did send out the latest edition of our free investing newsletter. We talked about a lot. We talked about the SEC, Gary Gensler, new rules and regulations that should be coming down the pipe in the new Trump administration. So check it out, read it. You could sign up by scanning the QR code on your screen, punching in your email, and we will be back live tomorrow night from New York City. Friday night should be fun. So Reggie 44, Joseph Hardaway, Mohammed, Tatted T, Connie Ruiz, Hawaii, Professor Dario, Nina, thank you so much, Julian, New England Crypto, Mars Tech, all of our moderators, Trade Brigade, Jadelson, Ben. I'll read your email right as I go up to the office. God bless. Good night. We'll see you soon.